So you're running your business, sales are going well, looks like things are all quite peachy. The question is, how do you know if you're growing your business and how do you know if you're actually profitable? Well, to know that, you have to be tracking the right metrics. So in this two-part series, I'm going to take you through the 10 business metrics that every business owner should know. Now, if you've not met me before, my name's Paul. I'm an accountant, I'm a CFO, I'm an entrepreneur, and I've got over 25 years experience at helping businesses to grow profitably, as well as running 3 businesses of my own. So I'm not new to this subject and I'm very keen to share some thoughts with you today. Now, before we get into the detail, I'd like you to do me a quick favour, and that's click the subscribe button. I do post new content every week and I would love to be able to share it with you. Okay, so let's get to the matter in hand. What are the metrics you need to be looking at to really monitor and grow your business profitably? Well, let's take a look. 1, sales or revenue. Now, that might sound obvious, but in my experience, particularly new businesses, they don't necessarily look at this on a monthly basis. And I believe you need to look at it on at least a monthly basis, if not weekly. And it's something that it's the key, it's the money coming in the door if you think about it. And when I look at revenue, I actually like to look at it in 2 ways. There's 2 different ways to look at this. One is what's known as gross revenue, which is the price that you charge for your products before discounts or anything else. And then there's the net revenue, the price you end up with in the bank after you've given all the discounts, and if you've got to pay any sales taxes or anything else that comes off, that's the lower amount. And the reason I like to track it is because this figure here for discounts. Now, to me, a lot of businesses, in my experience, don't focus on this as heavily as they do, but the level of discounts that you're giving on your goods or services makes a huge difference to whether you're making money or losing money. And there's not enough focus on it, in my opinion. And that's why I like to look at revenue in the 2 ways. The top line before discounts, and then the net amount after discounts. And let's see how this amount is moving over time. You could even look at this as a percentage, which is really helpful. And then you just get a sense on how much money you're giving away in discounts and promotions and whatever else it is every month. So that's the first metric. The second metric we're going to look at is gross profit. Now, some of you have probably heard of this, maybe many have heard of this. Let me talk you through what this is. This is the profit you're making by looking at the net revenue, so the net amount you receive in the bank in terms of cash from the sales, less all the costs directly related to making that sale. Sometimes those costs are called direct costs, sometimes they're called variable costs. But the point is, you only incur those costs when you make a sale, and if you make no sales, they're 0. The profit after those costs is called a gross profit, and that's a number to focus on. So what things am I thinking about? Well, how are we going to calculate this? So let's say in this example, we're going to take our net revenue. Let's just say our net sales were $10, right? Okay, sales. What we're going to take off in terms of our variable costs? We've got the cost of, say we're selling widgets. Let's say the widget costs me $4 to buy in, okay? Then maybe I've got kind of shipping costs, because maybe I'm shipping things out to customers. That might cost me another $2. I might have, say, transaction fees. That's quite likely if you're taking credit card payments or anything else like that. Once you take off anything else which is variable, let's say you only incur these costs if you sell anything. If your sales are 0, these are 0, then after that you're left with your gross profit, in this case $3 per item. And again, you want to be tracking the level of this. You can look at this as an amount and also as a percentage, which is also very helpful, and see how that percentage is moving as you go month on month. And of course, the ideal is to try and make the profit as big as possible, which means making these costs as low as possible, and the revenues as big as possible, which does then play into the discounts. Now, I know what you're thinking. I know all that, Paul. Why am I spending 4 minutes and 43 seconds looking at that? Well, this is where it starts to get interesting when we come on to metric 3, and that is to start looking at things on a unit by unit basis, just like we've done here, okay? Because you can imagine if you're looking at your accounts in your business, and it might say last month your revenue was $20,000 and your gross profit was $4,000. Well, That's interesting to a certain extent, and you can see how that's going up or down as months go on. But you can't use that information to do very much about it. You kind of think, okay, it is what it is, that's fine. But if you start looking at the number of units of whatever it is you're selling, and by the way, all of these metrics apply equally to service businesses as well as selling physical products, you start to get some very interesting things. So if you take your revenue and your gross profit and divide by the number of units you're selling in a month, you start to see how things look on a unit by unit basis, just as we've done here. So it could be that when you start doing that, you see that you're getting $100 in gross, your net revenue might be $80 per product. So immediately you're thinking, I'm giving $20 away in discounts for every single product I'm selling. Wow, that's high. Or, well, actually that's probably okay. It's just about what I can do. But that makes it very interesting. When you start looking at cost per item, shipping $2 per item. Does that sound right? That sounds a lot to me, depending on where your average customer is. Could I get that any cheaper? This is when you can start to really, I guess, interrogate the numbers and make sense of them. This is particularly powerful if you're not particularly numerate. By getting things turned into amounts per unit are much easier to understand. In this example here, I'm making $3 for every unit that I'm selling. That makes perfect sense. You can get your head around that. I'm getting $10 in sales, but I'm only getting $3 in profit. And then you think, how can I make that profit more? And this is really, as I say, really powerful. It really will unlock the numbers, particularly, as I say, if you're not particularly into numbers or financially minded. In my experience, not many businesses do this, but the extra insight you'll get by doing that is really powerful. In fact, I almost made this my killer metric. We had a very spirited discussion in the office about which of these metrics we would put on. I've gone with something else, but it's still a really key metric. Okay, so those are the first three that I want you to look at. Let's go on to metric number 4. Okay. Number 4 is we need to be tracking our fixed costs. Now, fixed costs have a couple of different names. You might also see them or know them as operating costs. You might also know them as overheads. Now, as the name implies, what these costs are, if you think of all the costs going through your business, you've got the variable costs that we've just talked about, the ones that fluctuate depending on how many things we are selling. Then you've got your fixed costs, which are costs which largely stay the same on a month-by-month basis, or perhaps better put, you will incur those costs regardless of whether you sell 0 items or 5 million items. They don't change, okay? So they're things such as, you might say, you might rent premises, you might have utility bills, you might have fixed retainers, you might have wages that you pay out, Now, over time, of course, you can influence these and these go up or down, but largely you incur these same kind of costs every month, and they're independent to a large extent on what you're selling. And the reason that I've put this on here, this is something that I want you to track on a monthly basis and see how it's fluctuating. Because what I find is, working with many businesses, people are all about focusing on how much I'm spending on the variable cost. How much is my postage? How can I buy this unit in for slightly less money? Which is all great, but these costs, the fixed costs, have a habit of creeping up over time in most businesses. Particularly when you start making money and making profit, you're thinking, I've got more to spend. I know, we'll buy everybody new laptops. We'll start to travel more. We'll go out more. We'll move to a flashier office. All of these things. And I'm not saying don't do those things, but what I am saying is you should be tracking how these fixed costs are moving in line with your sales. And if you think about this as a proportion of your revenue, over time, those should go down. And it's really important to have a kind of separate laser focus on this, and get whoever's preparing your numbers, your accountant or whatever, get them to show you the detail. It's really helpful to know what you're paying for certain things. And sometimes it can be quite surprising, frankly. So it's well worth focusing on these separately. Right, so those are my first 4, which brings me on to today's killer metric. And when I first came across this one, which was quite a few years ago now, I can tell you, just like the revenue and profit per unit, it really opened my eyes. The killer metric is the break-even quantity. Now I know what you're thinking. What the blazes does that mean, Paul? Well, let me tell you. So break-even, that's the point when we go from making losses to making profits. So break-even is that point when we tip that. And the quantity. So what this formula, which is very simple, and I'm going to show you in a second. What this is really saying is, how many things do I need to sell every month to cover all my fixed costs? That's the minimum you need to sell in any given month to know that you can pay all of your bills. So it's really, really important. And particularly if you're not profit making yet, which many new businesses aren't, it takes a while to get there, doesn't it? We all know that. This really kind of focuses the mind in terms of what you need to sell. It's a really, really simple equation as well. You take your fixed costs, which you've just worked out above, remember, that's what there was a method to my madness when I put it up there as number 4. You take the fixed costs and you're going to divide that by your gross profit per unit, which we looked at in point 3 above. So you've already got the numbers you need. So let's put some life around this. Let's put some colour into it. Let's say every month my fixed costs are $10,000. Okay, that's what I need to keep the lights on, pay the people who are helping me, pay all my bills, all of that. Okay, so that's my fixed costs every month. And let's say my gross profit per product, I'm picking easy numbers for maths. Let's say my gross profit is $10 per item. So if I divide the 10,000 by the $10, that basically means I need to sell 1,000 units every single month just to cover my costs. If I'm not selling that, I'm absolutely going to be losing money. And you can think about this in terms of how you're working with other people. Maybe you have a team. You know, what information you're communicating. You've got a sales team or people, helping you sell. That's a really good number to focus on. And you can say that's per month. You could break it down by week. So that's 250 units per week. You can take it much further. That's probably about, about 35, 40 units a day. When you start thinking about it in those terms, like how many units a day have I sold? Is it enough? Is it enough? This is where the numbers can really help you grow your business profitably. So that's why that's my killer metric. I use this all the time, and you don't have to be, whether you're a big business or a small business, it's always helpful to keep a very good eye on this. Because if you think about what else can affect this, let's look at what's in the equation. If I get my fixed costs down, I'll need to sell less. Or you can think about it, if I get my profit per unit up, I'll also need to sell less. So there's more at stake with this formula than just selling more stuff. You can be a bit smarter about it in terms of how you do it, because there's several things affecting your profitability. I'm going to stop there. That's metric 5 out of 10. I hope you found those helpful. I'm sure some of those you may know. I'm hoping there'll be 1 or 2 new ones there. If you're not that comfortable with numbers and calculating these metrics, do get yourself a good accountant or someone who can help you pull those numbers together. It's quite straightforward once you get your head around it. And to make things even easier, what I've done is I've taken these formulas and these points and I've condensed them into a free fact sheet, which you can download below, which would just enable you to take them away, think about it, and apply those to your own business, okay? And if you download that free fact sheet, I'm actually going to give you another free one as well. A while ago, I produced a fact sheet which is designed to help businesses to turbocharge their cash flow. It's the one challenge that every business had, and over the years I've kind of distilled down the things you need to do to 10 key points, and to be honest, several of them are really, really straightforward, and you can start employing these to make a difference to your bank balance straight away. So do download the free fact sheets and start using them in your business. Well, I'm going to stop there. Hope you found that helpful. If you've not clicked subscribe yet, please do it now, and do leave me some comments. I'd really love to know whether this is going down well, whether it's giving you what you want, whether it's not clear. Let me know, and we'll take it from there. But thanks very much, and I'll see you in the next video.